Good morning, guys. What's going on? It's your favorite mortgage lender, Abdel Kouami, got mortgages. We've got so much to uncover. A lot of updates when we talk about the labor market expectations coming up this week. When we talk about inflation, we're going to do a super deep dive into everything. Really, kind of figure out what's kind of the expectations, right? We know that the labor market, at one point on Wednesday, was truly showing signs of weakening, right? May only added 139,000 jobs. Again, according to the BLS report, they did revise the prior month by almost like 96,000. It's pretty crazy. Private payrolls on the ADP side only added 37,000 jobs. So, kind of a little bit of a big discrepancy between 37 on the ADP side, 139. We do know ADP just measures more or less the white collar jobs, private payrolls. Job openings are up just a little bit, but again, real opportunities, as most of us know, are pretty much overstated. Unemployment claims continue to remain a little bit higher. Layoffs are up 80% year over year, right? So that's important for us to know because those are the things that we really want to kind of make sure many clients are obviously aware of when we talk about the layoffs and we talk about obviously the job opening. Home values, we know, jumped up 0.6% in April, up 4.3% on an annual basis. $500,000 home, again, basically in this point, even at just a 4.3 basis, will basically show almost a $20,000 appreciation in value, which is important for us to know. So let's do a deep dive when we talk about the inflation market and kind of what's happening. Okay, if you take a look at this part on the screen, like I said, revisions to the key report. So we know only 139,000 jobs. As we can basically see the last 3 months, unemployment rate has been pretty much flat at 4.2%. Why is this important? It's certainly important for us to know because we want the unemployment rate, for the sake of interest rates at least, for it just to tick up. Because if we continue to see inflation continue on a slow, gradual trend, right? We saw PCE report, personal consumption expenditure report, showing signs of weakening. Wednesday and Thursday, we'll see CPI. We'll talk about how that's going to be a little tricky for some of the data for us to replace from the prior last year, right? Remember, this data is 12 months lagged. So important for us to obviously know that and understand that. Now, when we take a look at the Bureau of Labor Statistics, we know on Friday it added 139,000. We're only expecting 130. I knew that this consensus was obviously going to pretty much change, knowing that ADP came out and only showed 37,000 jobs. The bottom line, the important things for us to know is that when we take a look at some of these revisions, January, they changed and said they were off by 32,000, February 49, March 108,000, then April 30, and I believe May we'll probably see again those slight revisions in place as we've been seeing. The private payroll part is the part that I want us to really keep an eye out for. You'll see April and May huge misses on low expectations of obviously private payroll jobs, right? So we know the big downside has been on the small employer and the large employers with the dropping. Job stayers again stayed flat at 4.5%, along with job changers at 7%. 37,000 jobs, which is crazy. We were expecting 115,000 in terms of new private payroll creations. We only saw 150. We only saw 37. Slowest pace since March of 2023. Again, showing massive signs that obviously employment market is shifting and is changing, and things for us to keep an eye out for, right? Wage growth, like I said, maintained at 4.5 and 7. Job openings continue to slowly rise unexpectedly, right? 7.39 million, up from 7.2. Big portion of that was professional and private healthcare sectors. Continuing jobless claims did tick up to 1.9 million. Again, important for us to know that. We know that the calendar jobs report that came out also showed that there was a surge of 50% compared to month over month in last year. Job cut announcements also show a big shift as well. Bottom line, again, is the recent uptick when we look at the initial unemployment claims, obviously relative to continuing jobless claims, shows that difference between the two, right? Home values, like I had said earlier, jumped up according to CoreLogic at 2% and according to Totality at 4.3%. So a lot of that stuff. Again, what are we going to see this week? Tomorrow is going to be a huge week when we talk about the CPI report, Consumer Price Index, and then Thursday will be Producer Price Index. Important for us to kind of see some of the things that we are going to be replacing, right? Now, when we take a look at so far the last couple of days, we know that right now there's been some talks with U.S. and China resuming their trade talks. That's important for us to obviously know because we know tariffs is one of the scary things right now. The Fed is kind of holding off, right? They're going to meet next week. don't expect any potential cuts or any potential hikes in the rates. I think they're going to continue to remain steady and monitor some of the numbers. We know, again, when we talked about the CPI report, it's likely going to show inflation actually ticking up, whether it's because of tariffs or whether it's because of those low numbers that it was in the prior year. We do know, again, though, on a positive note, right, like I said, the consumer sentiment is slowly starting to shift as well. We are, at least in our part of the world, right, on the East Coast, tends to usually tick up in terms of home options and in terms of a lot of different people looking to move. So that's important for us to obviously keep an eye out for. Let's take a look at real quick how interest rates have been doing over the last few days. We can kind of basically see that we've been slowly kind of stuck between this ceiling of 7.02 and 6.95%. So if we kind of see here, you'll see 6.95 has been a little bit of the change. 15-year slowly ticking down to 6.21. And obviously on the 30-year, when we talk about Freddie Mac, we're at 6.85. So again, a lot of different changes for us to monitor. Of course, I'll continue keeping us updated as we start seeing, hopefully this week, inflation. Again, the expectation is it's going to probably tick up, mainly because of the data points that we're replacing. But of course, I'll keep you guys updated as we continue seeing some of these changes, and we'll take it from there. Thanks for jumping on, guys. I'll talk to you guys next week.